Hey everybody, my name is Brandon from thestocksnews.com, and today I want to talk about the three stocks that I'm watching this week. Those three stocks are NIO stock ticker symbol NIO, EHang stock ticker symbol EH, and lastly Bristol Myers Squibb stock ticker symbol BMY. So now let's get started. So the first stock that I'm watching this week is NIO. If we look at NIO's trading charts here, we see that we are actually at a very dangerous spot around the $40 level. We see that the nearest support level is actually where we are right now, around the bottoms of these three candles, which is the $40 level. However, if we look for the next nearest support level, if we break this $40 support level, we could be heading all the way back down to the $34 to $33 level. Because of that, and by doing some math, that is about a 15% downside risk, assuming that we trade down to that level. If we look at the nearest resistance level, that is made by the tops of these candles over here, as well as the tops of these candles over here, which is around the $47 to $48 level. From those levels, we can see that we have about a 15 to 20% upside from where we are right now. However, we also have to consider that 15% downside risk to the $35 support level. So to me, that's like a 50-50 risk reward to the downside and the upside, because we are right in the middle of the range. And to me, that's not really a place where I like to be. 50-50 odds that thing goes up or down is not good enough for me as a short-term trade, because that's a fair game. If I'm at a poker table, I don't want to be putting all my money in at a 50-50 odds. I want to put my money into an unfair game where I have at least an 80-20 odds of winning. Because of that, I want to know which direction NIO is heading before I step in. If NIO goes up on strong momentum, then we are likely to see the $46 to $48 resistance level up here. However, if NIO goes down on strong momentum, then we could be seeing this $34 to $35 level, and that is a place where I'll likely be picking up shares for a short-term trade, as well as adding to my longs. That said, if I was to hazard a guess at which direction NIO will go, I would actually suspect that NIO would go down. Last week, around these 2 days here, President Biden talked about his infrastructure plan, which should have been an incredible boost for EV stocks like Tesla and NIO. However, if we look at the charts here, we did gap up a little bit the past 2 days, but then we closed down on the most recent trading day. And that's kind of a yellow flag to me, because that was good news that should have been a boost for the stock, but we saw bad price action. Again, not a red flag here, but investors still may be wary about a couple things. Investors are likely thinking about interest rates rising, or the fact that NIO had to stop production because of the semiconductor shortage, which will affect the deliveries for the quarter. These two macro factors will definitely have an impact on the fundamentals of the stock. However, as I've said before, I'm long NIO because of the strong growth rate that NIO has shown and the larger macro picture. So taking a look at NIO's fundamentals here, if we switch on over to the earnings report, we see that for total revenues, which is this line on the earnings report here, we see that we are growing impressively quarter over quarter around 46% and year over year around 133%. That is fantastic growth of the money that is coming into our business. Again, if we look at the gross margins here, which I think is even more impressive, we see that quarter over quarter and year over year, we are increasing fantastically again. Last year, we were basically paying people to buy these cars when we were selling them for a negative 8% margin. But now in the most recent quarter, we actually see that we're turning a 17% profit margin, exactly what I want to see as an investor. However, if we look down at the net loss here, we see that yes, year over year, we are cutting our net loss by half, and that is impressive. However, if we look at quarter over quarter, we see that we are increasing our net loss by about 30%, and that is definitely a risk. NIO is still losing a bunch of money, and its valuation only makes sense if NIO continues growing. For a company worth 62 billion United States dollars, when we're losing around 1 billion RMB per the quarter, annualizing that out to around 4 billion RMB for the year, which converts to about 600 million United States dollars, that is a huge risk for investors. But again, the reason why I'm long NIO is because of the stellar growth rate, and the size of the total addressable market is absolutely ginormous. EV cars is a future that will probably happen, and NIO is one of the top dogs in the Chinese markets, which is one of the largest markets in the world. Again, it is a bit risky because of the net loss and valuation, but it is up to you to decide if the risk outweighs the benefits. So after talking about NIO stock, let's head on over to EHang, the flying EV drone company. So here we are in EHang, which is the next stock that I'm watching closely this week. Quickly, for those of you who don't know EHang, this is a company based in Shanghai that makes autonomous electrical taxi drones. They also have a drone business as well, which I believe is their main source of income at the moment. However, most people are interested in the stock because of the flying taxis, of course. So if we look at the chart here, we see that a few months ago, we were really flying our way up to the moon before a short seller report from Wolfpack came in on this day here, and we had a massive sell-off in the stock. Basically, the short seller was calling fraud on EHang's business, saying that a lot of their revenues were coming from a shell company and thereby accusing EHang of making fraudulent claims of revenues. Ever since that short seller's report, we've been really waving out here between this $31 level and going up even into the $50 level. This is why I'm watching the stock closely. This trading range between like the $30 and the $50, that is like a 50% trading range. So what I'm doing is that I'm watching to see if this stock can come back down to the $30 level here. If we do, then I might open up a short-term trading position to potentially capture some of this 50% upside potential from this $30 level here. The reason why I'm not stepping in right now is because at the price of around $36, we have about 20% downside if we do fall back down to the low 30s. Because I'm a little bit cheap and play my short-term trades a little bit tight, I want more clarity on the directionality of EHang stock before I start putting money in. So now let's transition to EHang's earnings report here, and we can see that we're actually doing pretty good as a business, increasing total revenues and gross profits by about 100% quarter over quarter for both of these total revenues and gross profits here. What that's telling me is that these gross margins are staying steady, which is showing efficiency in the business. We are also keeping our operating expenses pretty flat quarter over quarter. And again, that's what I like to see. So what that's telling me is because we're basically doubling our gross profit quarter over quarter, but we're still maintaining our operating expenses at around the same level, what that's telling me is that we should be able to capture more of this gross profits here. So because of that, we should be losing less money quarter over quarter. And if we look down here at the net loss, we see that that is absolutely true. We see that last quarter, we were losing around 19 million, but now in this quarter, we were only losing around a million RMB, or 157,000 United States dollars. So what that's telling me is that EHang looks to be very close to reporting a net profit quarter if their revenues still continue to grow. And that is definitely a fantastic thing and is what I want to see as an investor. However, even though this third quarter looks quite good, I want to actually wait until I see the fourth quarter numbers to see if EHang is still growing its revenues before I open up a long position. To me, there is quite a bit of risk with EHang. As an investor, for one, if the short seller's report ends up being true, that is definitely not desirable. You also have concerns about delisting of Chinese companies, which EHang could definitely fall under. And you also have the risks of valuation and interest rates with this company, as this company is still losing some money, but its market cap is about $1 billion. So for that reason, I'm okay with opening up a short-term trading position with a quick stop loss, as this gives me the optionality to hold a long position. If my money doubles, then I can take out my premium. So after talking about EHang stock, let's head on over to the last stock that I'm watching this week, and that stock is Bristol Myers Squibb. So the last company that I'm watching this week is a large pharmaceuticals company called Bristol Myers Squibb. So firstly, yes, I know this may not be as interesting as autonomous flying electric taxi drones that can fly you from one building to the next, but that's exactly why I like Bristol Myers. For me, I do not want my portfolio all in Tesla. I don't want my portfolio all in Bitcoin, NIO, or any of the other hyper growth names. For me, I want a balanced, well-diversified portfolio that will likely do good in all types of environments. And Bristol Myers is part of my diversification into the healthcare field. This stock may not see hyper gains super quickly, but it also will probably not see hyper losses super quickly as well. I'm using it as a hedge to balance out the riskier, more speculative sections of my portfolio. If I need a source of funds for when there's, say an inflation scare or something, then I can sell some of my Bristol Myers to generate cash that I can redeploy and pick up some shares of the growthier names that may now be selling at a discount. If that inflation scare never comes, then I'd still be collecting a cool 3% dividend and probably some rise in the stock price as well. This is just a quick summary video, so I'll keep the rest of this section short, but I also really like the pharmaceutical pipeline with potential cancer drugs. So what I'm looking for in the stock chart is for Bristol Myers to reach this $60 support level again. If it does, then I might be adding to my long positions. But now let's transition over to Bristol Myers earnings report here. And if we look at total revenues here, we see that we are seeing an impressive 39% change in total revenues. There are some risks with Bristol Myers, however, and those risks are regulatory risks against the pharmaceuticals industry, and you also have to note that if you look at the loss per share using GAAP numbers, we are actually losing money per share. So that 3% dividend is not really secure, and they could cut that at any time. But with that said, even though I'm not expecting phenomenal gains out of BMY, I did sell some during the last interest rate scare to rotate into some of the semiconductor stocks. So I'm looking now to rebuild that position, and that's why I'm looking at Bristol Myers this week.